everybody. Welcome to TraderMerlin Show, your weekend edition. Friday it is. An interesting Friday. Unfortunately, I told you guys yesterday, I was like, well, let's see how this week finally pans out. I'm looking for a nice glass of whiskey. Actually going with the Cerveza today. That little end-of-day sell-off actually caught me off guard. Of course, you leave it to me to end up going long on the S&P. Rises takes a big dump. Also got a little bit hit Snapchat. But, all in all, I'm not too disappointed with the week. It is what it is. I just wanted a nice cold beer. Anyway, hope you guys are all doing well. Big Eb, Jorge, Jeff, Shane, Terry, Tom, Brian, Ron, and, of course, as Gary says, let's do this thing. Absolutely. Cheers to everybody. Let's get rolling. Okay, so as you guys can see, the graphic for today's show, just a trading week wrap up. Obviously, COVID playing a major role in it for those of you like myself who are going to suffer through this weekend where we have basically quarantine stuck at home. I went and bought a 3,000 pack of toilet paper. Just nobody's TPing people's houses for Halloween this year because, usually you do that as a kid in egg houses, but now they're so expensive and out of stock. No one's using TP. What I did is I went back through and there were a lot of questions about individual securities. From doing the shows at Power Trading Radio, sometimes I'm nervous about specific security recommendations because according to regulators, they would view that as me giving financial advice. And as you guys know, I am not a financial advisor. However, because it's one too many, I am clear to make comments and references to specific trades. So I will do some of that today. Of course, you guys have specific things you want me to analyze. I'd love to do so. So let's get things started. I'll go to your first question, which came from Darren today. Darren says, I bought Gap back in June and have been really happy. I moved my stop loss up to $22. Is there a better place for it to go? Okay, let's check out Gap. GPS, if I'm not mistaken, is the Gap stock. And I've got it on a 5-minute time frame, so I'll go back to the daily. I don't know what time frame you're on, but I'm going to assume, Darren, this is on a daily time frame because you said back in June. Could be daily, could be weekly as well. Oh, Les, you're in Cape Canaveral? Sorry, we're getting the launches out here this weekend. Apparently, Elon Musk is doing another launch for SpaceX this weekend. Right near Lompoc, so it should be an interesting one. Always fun to watch those things streak across the sky and let everybody freak out. Holy cow, Big Ab! What's going on? Have you been drinking, Big Ab? You gave me a $20 contribution. I appreciate that. I'm glad I helped you, and more than happy that I've helped you save some money and make some money along the process. So wow, thank you so much for that. A hell of a way to start off my weekend. Cheers to that one. All right, so let's go back to the GPS here. And again, Big Eb, as always, you got questions, let me know. I will be happy to answer them. So, Darren, I'm not sure what drew you into Gap. I can see you said back into, into June, all right? So that's someplace back in here. So I'm going to make the assumption, you haven't told me where, but I'm going to kind of block off the month of June just so we get an idea of what that looks like. Here is June. So this whole area here is June. So basically the lowest you could have possibly bought in, since you didn't tell me, is 886, and the highest you could possibly have paid for this is right around 1370. So, yes, Bitcoin. Yes, it's gotta love it. Brian as well. Woo, man, I'm loving it. Thank you, Brian, so much for the contributions. I love it. You guys you're making my weekend. It's Happy Thanksgiving Day here, apparently. All right, so look at the range here that this guy's got. I will highlight from the low just so you get a better reference on Gap. Now, obviously, Darren is very pleased, as you should be, because even if you bought in at the highest price, which is right around $14, you're still up $10 per share. Love it. Okay, so what do you... I guess the question I have for you is, what was your original plan here, Darren? I always ask that. You said you're moving your stop loss up, which I love it. You're basically locking it in as it goes. Now, the thing that you got to be careful with is earnings for these retailers. If I'm not mistaken, Gap comes out Tuesday. I think that's going to be before market open because it's an NYSE stock, but I'll check that one here in just a second. So let me put your stop loss on the screen so people can see it. And there's where you've moved up from. So you bought somewhere in this yellow area, and your stop loss is now at 22. Now, a couple different things here with regards to your stop loss. Number one is your stop loss is right where I would expect it to bounce, right? I would expect it to have a nice bounce off of 22. So if it were me, I would move it down below this most recent red low. You guys see this candle here? For the podcasters, I'll walk you through it. In this uptrend, there was a nice little sell-off that bottomed out at a low of about 2154. So my stop loss would be someplace just below 2154. what you could also be doing here, instead of just using a stop loss, because let's be honest, this trend in gap looks great. I don't get it because, retailers have been certainly impacted. We read about it in the retail sales numbers showing that they're one of the hardest hit in COVID because of the pandemic and shutting down. But the chart's gorgeous. I mean, this is one amazing looking chart. Yes, you want to be long and strong and keep it going. You got two choices. You could either set that line there and potentially jump out, lock in your profit and be happy with it. Or, you could be using options as protection against this. You could be, if you wanted to, you could be selling calls at, let's say, 28, 29, and basically saying, all right, I'll sell it if it gets up to 28, 29. Or you could be using, maybe buy some puts below 22 just in case it did get there as protection, a small amount, kind of like an insurance policy that you're saying, all right, I'll give it this room back down to 22, but if it gets below it, that put option will kick in, depending on what your Greeks are on it, and you can, be making money on the put and protect that trade. So those are different pieces. I like it. I don't know if I would put the $22 stop. I would probably go slightly lower than that, just because I want to incorporate in that little bullish harami that you guys see, and we've talked about that on shows here in the past week or two, where we looked at harami formations, and I think you guys can see it. This little combination of two candles right here is a bullish harami formation, which just ripped to the upside the following day. So that's pretty much what I would say with that one, Darren. Is there a better place for it to go? Yes, and that would be down right around 21.50, just to make sure that we incorporate that most recent low. Cool. Okay. Yes, Brendan says get ready for more lockdowns, media circus, and printers to go. Brr, yeah. I mean, sadly, that's the truth. We're going to see probably more lockdowns. We'll probably see more regulations. And then all of a sudden, the Fed will kick in and do some easing. And our governments will probably come out with a stimulus. Although we talked about it yesterday with Bill Addis. Right now, it seems like the attitude from our president is kind of, burn the whole village. And we'll see if he actually agrees with anything that's signed from the House of Representatives or Congress or Senate, all that stuff. We'll see. We shall see. Okay, that was question number 1 from Darren. I will go on to question number 2, which brings us to Terry. Oh, okay. He says, can you talk about trade setups for next week? I don't know if you're asking about specific trade. Oops. I'm using a different screen out here today. There you go. There's the question from Terry. He says, can you talk about trade setups for next week? Now, I've purposely not gone into trade picking on this program, and there's a reason for that. Years ago, when I was doing Power Trading Radio, I did a session called the Power Pick of the Day, where at the end of the program, I would go through from my list that I usually gather up every day, and I'll say, this one looks pretty good, and I would do my entry, my stop loss, my price target, and show people this thing. And what happened was, some of them, as we all know, some trades work, some trades don't. That's just part of the game. The key that's the most important is to make sure that if the ones that go against you, that you don't take a huge loss on those, right? That's why you have a stop loss originally as you make the trade. So again, I would map out entry, stop loss, and price target. And I remember I got an email from one of the viewers just tearing me apart on how bad I was and what a scumbag I was and how he lost a ton of money because he had taken a trade that I called the Power Pick of the Day. And I said, well, how did you lose a ton of money? And by the way, he threatened to sue me in this. He says, well, I took the trade that you mentioned as your Power Pick of the Day. I said, well, it has an entry, a stop loss, and a price target. So if you followed the entry and you got in and this trade went the opposite direction, you should have been stopped out and taken a small loss. I said, did you get out? He says, no, I'm still holding it. I said, then that's on you, my friend. But unfortunately, what it does, it creates a sour attitude on the part of the viewers, and I think that kind of makes me feel not wanting to go into it. So what I'm going to do is I will show you, I'm going to do this. I'm going to show you some stuff that I'm looking at, that I'm interested in, and I'll give you the logic behind why I'm interested in. What I'm not going to do is give you entry, stop loss, and price target. I will let you guys all make your own decisions on that one. If this was a subscription service and I was charging a weekly or monthly subscription to it, then yeah, I would give out all that information. But yeah, no stop loss, Jorge. And he was blaming me. Yeah, thanks, buddy. All right, so let me go to the charts here, and I'm going to start off with a couple that I think are going to suffer downside movement next week. So these are ones I think just from chart formations and setups look like they're going to have some difficulty next week. And I'm not going through the full list. I'll just give you, probably 3 positives, 3 negative ones. Applied Materials was one that jumped off my list first. And of course, can you buy or sell options on crypto? Yes. There are certain exchanges in the crypto space that will allow you to do options on it. I haven't done it, so I don't know much about that. To me, that's a bit speculative. There isn't a centralized exchange like the Chicago Board of Options Exchange where you can have that type of market, meaning the prestige of one of the big exchanges. It's usually a smaller exchange like BitMEX will do their own options trading, and to me that's a bit shady. I probably wouldn't do that. All right, so number one, and I'm showing you a variety of different things simply because I've talked about patterns a lot, and I mentioned that shooting stars is one of my favorite. Now this has almost all the hallmarks of a phenomenal setup. Right? There's a couple of things that it's missing, and I'll explain as we get there. First and foremost, I'll show you the entry price. And you guys remember the rules that I went over last week for this. Was it last week or this week? Hell no. Time flies. Who knows? I'd be going off the low of this little hammer formation or shooting star formation right here. That means if it opened up anywhere above 76.68, right? If it opened up anywhere above there and then started during regular market hours to sell down below that, that's a short opportunity, right? That's what I would be looking at as a potential short. Now, the thing that I would love it as an extreme validator of this one, it really make me feel like, hey, this is going to be a much better trade. Down here at the bottom, you guys see I have volume. The black bars represent the volume for that day. The blue line represents the average volume. So it was just a hair under average volume for today's trading. Now, what I would love to see would be a big spike, and I'll show you some of those too. They are there's a couple trades I'm going to look at here that have volume spikes. But to me, when you get a volume spike, let's say double or triple normal volume with this type of formation, that's a great reversal indicator. The other piece here is if I step back and go to, let's say, a weekly time frame, and we zoom out a little bit, you're thinking, well, does it come into an area of supply? And as you can tell, it is not coming into an area of supply. Okay, I could even go back, see if I can go back even more. I'm going all the way back into 2001, but I think if you go back 30 years, you'll see some peaks. So, there you go. It's, there's nothing to reference it as a supply zone, so that makes it a bit challenging. If I saw this hammer had hit a supply zone and a climactic volume, that's one where you're kind of rubbing your hands and you feel like Gollum going, "My precious, yes." It's the beer talking, people. I don't know what it is. So that's your first setup for the day. Shooting star formation on applied materials. Now, that's a downside move. Next downside move, even though their earnings were pretty good this week, and it looks really good from that perspective for the retail companies in that sector, Target. Target, exact same thing, guys. Target has the exact same setup, although it's not as strong as what we saw in applied materials. It's kind of a little spinning top. Some might call that close to being a gravestone doji. I don't know. It looks bearish. Volume was higher than expected, so to me that's pretty good. But all I'm doing is I'm not putting a lot of pressure on these trades, guys. I'm simply waiting for price to come back down below 171, and that might be an opportunity to be going short. I think it's had a nice run. Not to say that Target's a bad company or anything. I'm just saying let's follow the waves of price movement, and now it looks like it might have a little bit of a retracement. That's number two. Third one's a little bit different. This is DISCA is the ticker symbol. This is Discovery Incorporated Services, and the reason I like this one, you look at this and you're going, wait, Merlin, it's not a candlestick formation. It's not a shooting star. It's not a hammer. No, it's not. But look at the volume. Today's volume was 9.9 million shares for Disc A, and its average is 4.25. So you're over double the average volume. So now we ask our question, is it coming into an area where I might feel happy potentially selling it? And you'll notice that the high, well, I'm not going to go to the high. I'll go to the closing price. Way back here on the 8th of June was 26.15. Now you're at 25.49. So what I would be interested in doing is going back and looking at that candle that formed on the 18th or 8th of June and say, let me break that apart and see if I could find a better entry as far as a supply level on that one. Because I have climactic volume, which I would prefer if it was right into the overhead supply level, but it's not there yet. So I'm kind of keeping an eye on this one as a potential short around 26. But again, this one, I have to wait and let the stock and the market do what it does before I force the trade. Because I could open it up right now. I think you guys would all agree. I could go out there, or you could go out there and short at 25.49 if it opened up at that price on Monday morning. But it hasn't achieve the level that I'm using as my backstop for it going higher, right? I could short it at 25.49, it could rip to $26, and I'm still out 51 cents per share, and then it'll turn on me. Why let it get that 51 cent head start? So there we go. So that's the 3 negative ones that I think would potentially be opportunities on Monday as short sales. Now let's go to positive stuff. What do I think is moving up? Similar picture, I have AEP here. The reason I picked AEP is it is somewhat of a hammer formation. It's been kind of this rounded top. Some people might even call that I don't know, I guess you could call it a head and shoulders pattern that actually came to fruition. But if you look at the range here, it just feels like it's near the bottom end of its range. It had much higher volume than normal, over double average normal volume. And I just feel like this could have a nice upside run tomorrow for AEP is the ticker symbol. So that's one. Again, same basic rules I'm going to do for the other patterns because I'm basing this off of kind of a candlestick formation. If it opens up below 82.79, okay, I'll hold off. If it breaks above 82.79, then I'll go and look at a potential long for this one. Rules for targets with these, it's opposing supply zones, right? It's just looking at what those opposing supply zones are, mapping them out and saying, if I see a specific amount of profit potential, then does the risk fit? Meaning, after I calculate my stop loss, because sometimes the stop losses are below the hammer formation candle, sometimes you'll tweak them a little bit if that range is too much. So there is a little bit of tweaking that goes on with regards to the stop losses here. But yeah, targets are going to be off of opposing supply zones. So that was AEP. I owe you 2 more. I think I had AAP as well. The only reason I like AAP, it actually looks relatively weak. But one of the things we talked about on this program in the past was range-bound securities. And, oops, you look at this guy right here, and I know that box is not drawn appropriately. It's in snap mode. But, loosely, I think you can look at it and say it's been kind of stuck in that yellow box range, right? Just bouncing back and forth within that range. And right now, you're almost right near the dead lows. The dead low on that one goes back to this candle that was on the 24th of September at 142.46. So I could put a line across there and say that's my line in the sand at 142.46. One second. I got to put snap back on. It's like damned if I do, damned if I don't. There you go, 142.46. So it's been falling aggressively. There's pain in the marketplace on this one because you have the volume increasing much higher than normal. Granted, its average volume is relatively low, so I would not be trading any big blocks of shares here. And I wouldn't expect the options to be very liquid either, right? One thing you got to look at here is the volume that's traded for the day. It's under 1 million. That's not really a good one for me, but I did like the formation. And again, you could be using options and doing spread trades. You could be buying calls here at the bottom. You could be selling puts at 142. Whatever the case may be, there's a lot of different potential on this specific setup. Just be careful with the size because you are trading something that is relatively illiquid. Now, let me ask you guys this. If you're trading a stock that's relatively illiquid, and this one's trading an average of 800,000 shares a day, it sounds like a lot. But what's one of the major problems, and let's see if you guys can type it in the chat here. I'll get you guys interactive, other than the crypto chat, which is going on, and we'll certainly talk about crypto here shortly. What do you think was the major problems of trading something that's got 800,000 shares traded per day or less, right? What if it's got 100,000 shares per day? You should know automatically that there's a certain set of risks to you that you have to pay attention to. And the reason I know this is from firsthand experience where I was in Dubai, I was teaching a class, and I was actually done with the class. I was back in my room because it's hot and there was nothing to do. And I had purchased in 100 share blocks 1,000 shares of this company. And I was up a full point on it, I think it was up $1,000. I might have been up more than that. It was a pretty good trade. I have a picture of it somewhere. And as I was up significantly on this trade, I said, you know what? Looks good to me. I'm just going to sell out. And I did a market sell of 1,000 shares. And I moved that security myself by like 50 cents. 50 cents, I gave back $500 worth of profit because it was an illiquid security. Jorge says it right there. No liquidity. Now, it's not that there's no liquidity, right? But you know that pool, and I always use this metaphor or visual. When we're trading, I want to be trading something that's like an Olympic-sized swimming pool worth of volume. Right? I could jump in it at any point. I'm not going to hit the bottom. I'm not going to get crushed. I'm not going to lose my tooth, as my friend did many, many years ago, diving and hitting the bottom of the pool. When you trade something that's got low liquidity, the analogy is it's like one of those little kiddie pools. And all of a sudden, the risk to you, the potential to hit the bottom is much higher. As Batista said, or I think it was Batista, Batista and Gary said, the spreads get real wide. So you might have been trading something that had a 2 or 3 cent spread. Okay, should be a penny. That's fine. But all of a sudden, if it's very liquid, it could be 10, 15, 20 cents. And here's another thing. You might have a spread of, let's say, 1 penny on something that's illiquid. But the buyers and sellers, who are the ones that you're going to dump your shares onto if you're selling or buying, there might only be 100 shares at each level. So let's say that the best bid price is $8 and the best ask price is $8 and a penny. You have a 1 cent spread. But they don't show you is that each one of those people is only selling 100 shares. So you go to buy 1,000 shares, right? Because like, oh, it's only going to cost me $8,000. So you do a market order and you hit buy. It's going to take out that guy at 801 with 100 shares. And who knows what the next level is? It could be 802, 805, 820, 830, 890. Who knows what it is? If it's thinly traded, those levels, there won't be as many buyers in place. So all of a sudden, you might find that your average price on 1,000 shares that you thought you were going to buy for 801 is now like 815. And you go, wait a minute. Where did that extra 14 cents come in? Or it could be much worse than that. Slippage. And that's because of thinly traded stuff. Anyway, good job, guys. The liquidity, bid-ask spread gets big. And Ron says, can't get out. Well, you can always get out, right? You can always get out. But you might hit that market sell order in panic mode as you hit your stop loss thinking, I'll get out at $8 because there's buyers at the bid, right? And all of a sudden, you get out at an average of $7. You know, what the hell happened? Because of liquidity. That's why, one of the filters we use is look for at least 1.5 million shares traded per day so that doesn't come back and bite you. All right, one more. And if you guys have questions, feel free to ask me. I know I'm just kind of running through stuff, but I want to get through all of them. That was AAP. I like it for the channel, Advanced Auto Parts. Sideways action, $144 stock. I'll give you some nice premium on the options as well. Last one was LNT. LNT is one that I'm just keeping an eye on because it's coming back towards a level that I'd be interested in. That's this little demand zone back here right around 51.50 on it. Now, you're still a little over $1 away from it, so I'm not really thinking that Monday it's going to hit that. It actually looks like it's going to want to bounce a little bit on Monday. But if we get down to 51.50, I might be looking at a potential buy here on this one as well. Because what do you do during an uptrend? You buy pullbacks. And you can see that even though it's not aggressive like we saw with Gap or other stores, it is an uptrend with higher highs and higher lows. Much better. The beer today is Modelo. I feel like a light lager. You know, it's interesting. Back in, when I was in my early 20s, I lived in Northern California, and I had a couple friends. We were, obviously, we're NorCal. It's weed and beer, right? And somehow the junior college up there offered this beer brewing class with a guy named Byron Birch. He was a gold medal winner in the brewery world. And at Santa Rosa Junior College, he started a beer brewing course. And I turned to my buddies. I'm like, dude, let's do it. I'll buy all the equipment, and we'll take class. We'll come back to my house. We'll brew beer, and just have fun doing it. So we did that for quite some time, and we made all kinds of crazy stuff. All these, you're throwing all kinds of cherries in this batch, and we had all these, it was like a Bible almost of our recipes. This little book of to the T, every single thing that we put in, cook times, all that stuff. And I used to like the darker beers and the IPAs and all that stuff. Now I actually like lagers. I like kind of quiet stuff. Yeah, there you go. But the Brouhaha, or Brouhaha, which is this guy right here. That's the OC Fair. If you guys are in Orange County, I would encourage you to check it out when the fair is allowed in town. That, my friends, was a lot of fun. Yeah, Gary, I'm not doing herb beer. Edibles, any of that stuff for me. I know we've got some fans in here of the cannabis stuff, but my weed days are long done. All right, let me see what I got here. Brendan says low liquidity is hard to get in as well. Right, yeah, it's that same double-edged sword, right? The key is, if you're trading something that you know is thinly traded and you're going, I normally trade, let's say, 1,000 shares, you better reconsider. All right, watch it for a second. If you have access to level 2, bring that up to see, can you get that 1,000 shares at the advertised price? Most likely, you're going to get slipped a lot, especially if you're using an online broker. A lot of times, they'll sneak you and fill you out of their order book, and all of a sudden, you paid a big premium because they sold that order to somebody else. All right, so that's 6. I gave you kind of 3 basic setups for longs, 3 basic setups for shorts. Any one of those could be a nice trade on Monday. We'll have to wait and see how it all pans out. Of course, only time will tell. We have no clue what's going to happen by Monday morning. It could be the doomsday apocalypse for our markets, or it could be all-time highs ripper and we see the biggest gains ever. I don't know which way it's going to go, but that's why I always plan bullish trades and bearish trades. So if I have the time to be day trading, I'll just spot one of those and go for it. Okay. Next one. I thought this would be interesting just because it's a little bit different than what I normally would do. Tran says, would you call the daily chart of Thermo Fisher a head and shoulder? Thermo Fisher is ticker symbol. I think it's TMO if I'm not mistaken. Let me just type in TMO here. Yeah, Thermo Fisher, TMO. Tran, this is kind of look, one of the things that you have to understand about technical analysis and chart pattern reading and all that stuff is it's very subjective. Some people look at the picture from Picasso, the Guernica picture, and say it's amazing. Others say it's just absolutely ridiculously stupid. So, is this a head and shoulders pattern? Well, look, I will torture it. As they say, if you torture a chart long enough, it'll tell you anything that you want to hear. You could make the argument that somewhere in here would be a head and shoulder, right? You got the left shoulder, the head, and then the right shoulder form. Now, what does that mean? If you're using traditional measuring objects, that would be from the peak to the neckline, which is somewhere in there, and then you move that, and that would tell you that Thermo Fisher on the break here could see some pretty significant downside. It is a $450 stock. That's targeting a number right around 386. Now, we could tweak this because that line might not be to your liking. This is the challenge with technical analysis, is all of a sudden now I'm going to come up with a totally different number based off that break. And if you torture a chart long enough, it'll tell you anything that you want to hear. In this case, I can almost make it come down to this area of previous demand that goes back to July 13th. Is that a head and shoulders pattern? Sure. Why not? I think the rules are going to be the same, right? You're going to set a line for yourself. You're going to say, if it gets below this line, I'm now looking to go short on it. You will also have, your stop loss and price targets in place. I don't like head and shoulders personally that are set if it's in an uptrend. I don't like them to be broken down already. Ideally, for me, this would be something along the lines here where I might have spotted this earlier on and said, all right, that's a little better if I'm going to torture this and make it fit what I wanted, because this would have gotten you in 3 days ago on this red drop below it. But again, it's just difficult to say because you can always manipulate things to do what you want. Baldhead Beast, can you do a show us how about level 2, what to look for? Yeah, I can try. I don't think I pay for permissions for level 2 anymore. The reason is it's expensive, and a lot of times level 2, I used to use level 2 to really identify who's buying, who's selling. And if I saw a whale or somebody who was just buying a lot of shares, I could see it on the screen. You don't see it anymore. These institutions hide behind electronic communication networks, or ECNs, so a lot of time their action is not really distinguishable. Now, there is a trader out of New York City who's been doing this a long time. Basically, he's just a complete fraud who has been convincing people for at least a decade. I've probably known him for 20 years. And he tells you in his marketing materials, FTC, you should be going after this guy. That's a real fraud. He says, I can show you without a doubt what Goldman Sachs is doing right now on a level 2 screen. I apologize for those of you who say I curse a lot. That's absolute bullshit. There's no way. There's no way in hell right now you could tell me exactly what Goldman Sachs is doing by looking at level 2. And I can say that with confidence because I'll be arrogant about it. I was one of the best out there at reading level 2. It's what I did for a living every single day. I would read level 2 screen and I'd watch Goldman Sachs come into the marketplace, buy a bunch of shares, flip over and sell it and just capture the spread. Then all of a sudden, we started to get ECNs. And we had them for a long time, but all of a sudden, these institutions, Goldman Sachs, JP Morgan, Morgan Stanley, Wells Fargo, Bank of America, they all literally showed their name on screen. Like you say GSCO or MLCO, Merrill Lynch. We knew that was Merrill Lynch. It had to be. It's his company. It's their ticker. So you could see them buying or selling, but nowadays, if I'm Goldman and I've got to unload, let's say 100,000 shares of pick any stock that you want, there's no way on earth I'm going to show up as the best seller with my name says GSCO on the level 2 screen. I'm going to manipulate that by using a variety of different electronic communication networks. I'll be using ARCA, I'll be using EdgeX, EdgeA, all these different BATs. I'll use all of them so that you don't know what I'm doing. I am purposely trying to deceive you as an institution, as a market maker. Why? Does a magician want you to go, hey, don't look in this hand because the thing I'm hiding from you is actually right here? No, he's going to continue to deceive you. That's what market makers do. So there's no way that you would be able to capitalize or capture this, what Goldman Sachs is doing by reading level 2. The only benefit I see for you and for me is to look at it and say, can I buy this right now for this quantity at that price? Will there be enough buyers or sellers there? And if you don't have level 2, the easy solution is just make sure that something trades at least 1.5 million, maybe 2 million shares a day. What that also does is it removes a lot of garbage from the marketplace. Unfortunately, sometimes when I do it in TradeStation, it takes a long time for my data to load up. Otherwise, what I would show you is I would walk you through step by step building a watch list from the S&P 500. And as soon as you cut out everything underneath 1.5 million shares, it's like the S&P 300. I'm like 200 of those are just very thinly traded illiquid stocks. Anyway, all right, what do I got here? Big F says it looks like a shrug pattern. Yeah, it kind of does. It's the Quasimodo, right? Okay, sorry, I know I haven't gotten to all your questions. I'm just kind of been rambling. Sorry, Shane. Level 2 is something that shows you where the buyers and sellers are lining up. And unfortunately, I don't have an example here. But when you buy anything, if you do a market order, you go to your broker and you say, yes, buy me these shares, they're automatically going to go to what's called the ask, A-S-K, or the offer. And what that is it's basically a queue of people who are all sitting there with limit orders saying, I'd like to sell these shares at this price. So let's say, for example, pick a stock, we'll make ABC as the stock. I've got my hands up to the market and I'm saying, I would like to sell for $100. And Brendan comes in, he says, well, I'd like to sell for $99. If somebody does a market order, it's going to hit Brendan first because he's selling it cheaper. Whoever sells it for the lowest price goes to the top of the queue. That's all it is. So on one side, you have the ask, which is all of the sellers lining up from whoever's going to sell it for the lowest price to the highest. And on the bid side, you have everybody who wants to buy it. And they're all sitting there with limit orders saying, I'd like to buy it at $95. Below him might be $94.99, $94.98, and so on. But whoever wants to pay the most goes to the top. Whoever wants to sell it for the lowest goes to the top. And that's your bid and ask. That's what level 2 represents. It's the order book for that specific security. And it's for equities. It's for futures. Forex, if you have the right broker, you can see level 2 as well. All right, let me see. Free level 2 on Thinkorswim. Oh, nice. You know what? Let me check that for you guys. You probably don't have free level 2. What you probably have is access to level 2, but through one ECN. And normally what happens is people will quote you what's called BATS. BATS is a major electronic network, but they don't charge anybody for the data. So a lot of brokers will pipe through BATS data as level 2 screen, but you're only seeing one part of it. So let me explain that a little bit further so you guys understand. The marketplace of all the buyers and sellers are obviously coming from the different exchanges, but also all these different electronic communication networks like BATS, like EdgeX, and things like that, and also from the different market makers. All of those together make up your buyers and sellers in the marketplace. The NASDAQ usually is the one who aggregates all that data, and they sell level 2. And it comes at a cost. You have to pay for level 2 data. But BATS is one of those vendors of data. So let's say I've got these 10 vendors of data, and the NASDAQ collects them all and will sell you level 2. BATS stepped out of that and says, you know what, we'll just give our data for free. So remember, if you're using BATS, you're getting a good representation of what the bid and ask might look like because there's so many people using BATS, but it might not be a clear representation of everybody who's trading it. So that's an interesting one. I'll have to look at that on Thinkorswim and see exactly what they're pulling their data from. They may have a relationship with one of the different exchanges, and they're getting that data for free. All right. Brendan says, I've done some link at $14, cost basis of 50 cents, noob market order. I'd have to look at that one. All right, let me go to more questions here and get through some of these. I think this would be the next one. Tim says, I bought some Home Depot this week. What's your analysis? You know, this one, I'm going to say it's really similar to that one we just looked at. I mean, Home Depot has done nothing but go sideways since August. So I would say if you're trading this bad boy, I wouldn't be interested necessarily in buying or selling it. I would be looking at trading the range. And if you look at where it's at today, if we loosely draw that range as to be, I think you guys all would agree that pretty much incorporates all the data and since August. And in that case, we'd be looking to, buy the lows, sell the highs. The good news here on Home Depot is you're at 269.81, and that low looks to be right around 263. So you're very close to its lows, which means, here you could be selling some puts to buy if it got to 262. If not, you're just going to collect premium. You could be buying some calls at this low or buy the stock outright. A few different options for you, but honestly, I don't expect there to be a big move to this downside here yet until it breaks that low. So, Tim, my analysis is you got a sideways trending security, which, let's be honest, is one of the best trading things that you can find. If you find something that just channels back and forth in a range for month after month, it's the proverbial ATM, right? Until it doesn't work, you just keep on buying those low points, selling the high points. As soon as it gets to the top, short it, write it down, and buy it back. Okay, let's see. Guys, we got a lot of crypto stuff, a lot of crypto conversations. Yes, and Ron, don't call yourself an idiot. You just don't know this stuff yet, right? It's so new. I think that's the challenge of a lot of crypto. First off, it's learning a different language. You're talking blockchain, all these different, these directed acyclic graphs and tangles and all the weird stuff. It takes a while to get used to some of that nomenclature, but there are some basics out there, and I do want to build that course again for you guys. All right, what was my next question? Oh yeah, this one was brutal. Brian, I don't know which Brian it is because there's a few Brians that watch this show. I feel for you. I looked at this one a moment ago and I was like, oh man, I'm sorry. This is why I do not trade biotechs or pharmaceuticals, people. This is exactly why. Brian says, I've been trading for about 4 years. This was the worst ever for me. I had a few thousand shares of Brainstorm Cell Therapeutics. I've never even heard of them. He says, how do you personally deal with big losses? I'm devastated. Yeah, guys, this is brutal. BCLI. This thing gapped down on Monday or on Tuesday from right around $12 to $4. You're looking at a 66% slide, and it doesn't matter how many shares you had. It's still painful no matter what. I mean, that's brutal. And I don't know how long you've been holding it, or firstly, why. This is something that had very thin volume. It traded 1 million shares average per day. I don't know what to tell you with regards to this trade, Brian. It doesn't look good. I mean, at this point, you just hold on to it, right? Because why dump it at 4 when it might have some hope of getting back up? The chart of this one kind of illustrates that point. It's got a lot of volatility. I mean, this thing kind of has some serious bounces to it. But as far as how do you deal with those losses, well, it's like a loss in anything. What helped me, and I'll walk all you through this, and of course I'm sure some of you might want to share your stories, but how do you deal with it is to go, first off, you have to tell yourself you did what you were supposed to do and you followed your rules. In this case, I'm going to guess that you didn't. I don't know what your rules are on this bad boy. You might have been buying it on hopes that they were doing something with I don't even know what Brainstorm Cell Therapeutics does, I'll be honest, but I would immediately look at cell therapeutics and I would just walk away from it because I can't trade biotechs or pharmaceuticals because this shit happens to it all the time. Oh, I'm sorry. Thank you. Thanks, Larry. There you go. There's BCLI. Yeah, sorry. I meant to show you this one. That is, it should take your breath away. That's tough. So, yeah. Why is this so brutal is because you may not have had a plan in place, and there's nothing you can really do to prevent a big gap like that other than, if you had some options in place. Other than that, this is why you don't trade anybody who's in the drug space long term. Ugh, that is terrible. Gary says alcohol is a solution. Well, I wouldn't recommend that. Basically, what you've got to do is you have to say, I did what I was supposed to do. If you didn't do that on this trade, you got to make it the most expensive learning lesson that you're ever going to have is look at that price chart and say, okay, what did I do wrong? Did I have my stop loss in the right place? You didn't have one, apparently, if you're still holding it at $4. So right there, you could say, I should have used a stop loss. Now, you may have had a stop loss, but that gap was so vicious, it would have just jumped it would have jumped the gap, right? If you had a stop loss and you're at $11, right here where my cursor is, if you had a stop loss right here on a good till cancel, it's not going to fill you till the opening price, which would have been all the way down here at, what's the opening price? $4.26. So that one is a tough one. Basically, what I would do is my learning lesson would be, okay, my only consolation here is I can't trade these types of stocks anymore because you got burned badly, Brian, badly. Now, once you remove that, you eliminate a bulk of the stocks that give you these kinds of crazy gaps, right? And you don't usually see these with like a tech company, right? You're not going to see this price equivalent right here would be like Tesla going from $500 to $160 overnight. That's not going to happen. Right? These are big, stable companies. This is a drug company, and this is what happens. That's why it's a rule of mine to not trade them. I think it's a rule that many of you probably should adopt if you don't like the risky stuff. Just don't trade biotechs or pharmaceuticals. There's tons of other stuff out there. So, in other words, in dealing with it, first off, what helps me is saying, did I do what I was supposed to do? If I didn't, I write down every single rule that I may have violated. Did I trade too big a share size? Did I violate my stop loss? Did I add to losing positions? Did I take home overnights? Was I trading the most volatile stocks? What was it that you did wrong? And that's where, trading is difficult because you have to be very honest with yourself and open and call yourself an idiot every now and again. I'm sorry. I call myself an idiot all the time in trades. Why? Because I did stupid stuff I shouldn't have done. Just admit it, learn from it, and move on, and know that you will be better down the road if you learn from this trade, Brian. If you don't learn from this BCLI trade, then your odds of success long term are pretty damn slim. You have to learn from this stuff and say there's a reason you lost. You said you have a few thousand. I don't know whether that's three. A couple would be 2,000, so you're at least 3,000 shares here. That was, I'll say $12 down to $4. You lost $8 per share times. So you lost at least $24,000 in this one. I don't know if that's a large part of your capital or not, but that certainly is a pretty painful loss. Now, I want to make sure I repeat this one here because Larry says never revenge trade. Yes, that is critical. Don't go at this BCLI right now. Do not run out there and look at BCLI and say, well, shoot, maybe I'll just go get a line of credit and I'll buy another $50,000 worth because it's at $4, right? Oh, and I could have made a lot more. No, don't do that. You need to I would leave it what you have here and just walk away and learn from it, move on to something else. That would be very bad to revenge trade. For me, I have revenge traded before, and I think my viewers would understand and actually probably validate this one. Larry as well, because he wrote never revenge trade. As soon as you revenge trade, that's when you lose more. Your emotions are in it. You do stupid stuff. You trade too big a share size. That's when things get really, really bad. So I would definitely do not revenge trade. Let's see. Kevin says, I would ask myself, will it hurt even more if it went to zero? If yes, I would cut it loose. If no, I would just forget about it and let it run as a lottery ticket. That's exactly what I would do. If you're looking at you still have a few thousand shares. So, 8 times 4, you're looking at $24,000 still in your pocket. That's still a good chunk of change. It's a definitely tough situation to be in here, but I would not buy any more of this. Do not put any more money into this stock. Learn from it. My personal recommendation would be you learn how biotechs will slaughter you. So just stay away from them. Move on. If you're going to trade biotech, stick with an ETF that's diversified. Cool. You guys are good. All right, let's see. I think I already gave the analysis on Home Depot. Oh, I had to look at this one. I had to bring this one up because, again, this is the challenge of even talking about things. If you watch the Monday Market Must-Knows and the show last week, and certainly the show with David Warner, we talked about the pound. And really what happened is the ECB made it a point, and they said in many press conferences that November 19th is the deadline. We know it's the end of the year, but if you don't have your agreements in and all the different documents in by November 19th, we won't have time to ratify those and run them by our people. So there's no way this deal will get done by December 31st, where you'll go into a hard Brexit if you don't have this done by November 19th. And Ian says, per your comments, I was expecting a big move in the pound on Thursday. Nice one. Well, that's sarcasm, Ian, and you don't have to, it's all a matter of opinion. You guys can take information here and do what you want with it, but you don't need to give me a hard time about it. GBP USD. Here's the British pound. It didn't really do much. You can see there was some volatility yesterday, but it wasn't that dramatic. And they still don't have an agreement, right? It still does not have an agreement out there. I'll put this to a 15-minute time frame so you guys can see the moves over the past couple of days. It really wasn't that substantial. You can see that late night on the 18th, there was a pretty big sell-off, and it's had some nice swings. But, look, Ian, it's all about you making your own decisions. One of the things I'm trying to do on this program is to make you aware of what's going on in the marketplace, and you can make your own decisions. I was encouraging people to lighten up a little bit if they're trading the British pound, because I didn't think that they were going to make it. I don't think that they're going to make a solid agreement by the time. I know, Gary, I keep forgetting. I'm using 3 monitors today, so I didn't think they'd get an agreement in place by the end of the year. And I think you're going to have a hard Brexit, and that's when this thing's just going to go nuts. But, knowing that the 19th was a line in the sand pushed by the ECB, you got to know that going in. And there was some volatility, but, to come at me and be like, nice one, dude. Whatever. Go do your own thing. Okay. So let me see. That was it. I'm going to see if I can go back and look at... Well, you guys are pretty chatty out there today. Do me a favor. I know that there's some stuff that you guys have been asking about, crypto related. We have some time here. It's 45 after. I still got some time. So if you have other questions, I went through the ones that were sent in at TraderMerlin.com or emailed directly to me at TraderMerlin@gmail.com, and I encourage you guys to do that. If you have more, I know there's stuff that you guys are asking about cryptocurrencies. If you want me to give some 2 cents on cryptocurrency stuff or anything else, now's the time to send them on in. I would love to answer whatever questions you guys got. Let's see. Larry says, I've got calls for January 20th on minis. Do I want to look at the monthly higher time frame or quarterly? Monthly. If you're looking at January 20th, I don't really even think I'd be looking at the monthlies. For me, it's going to be weekly, be my high time frame out there. Because it's only a couple months out. It's not like it's years away, right? I would probably be looking at weekly as my high, potentially even the daily, just because that's the way I like to. Daily is like my favorite time frame. I love starting everything on the daily, then go to the 4 hour, the hourly, 15.5 if I need to go that low. But if you got calls for January 20th, I would probably look at the weekly, not the quarterly on the higher time frame. I think it's just too big. If you're looking long-term investor, sure, but I don't go anything higher than the monthly, period. Ian's attitude is similar to the grumpy. Well, again, it goes back to why I don't do the power pick of the day, because it took one person to just lambaste me because they lost a bunch of money. And I'm like, dude, this is supposed to be informative, educational, and entertaining at the same time. I'm not your broker telling you, hey, buy these stocks. I'm giving you ideas, maybe something that you haven't looked at on your trading. Great. You guys have also given me things to look at, which I think is great. There's some times where I go, wow, that's a nice chart. I wouldn't have looked at that one normally. You brought it to my attention. Awesome. And we can always share ideas out there. That's what it's all about. Let's see. Absentee. No problem. Brandon says we all need to know about crypto and hodling. Well, look, obviously it's been a great run. What's happening with the crypto space right now. It's interesting because you're seeing some derivatives start up. There's one that's called, sealed Bitcoin or batched Bitcoin or something like that. That's actually now an ERC20 token, which is running on the Ethereum blockchain and it tracks Bitcoin. That's a very interesting change. Let me see if I can show this to you. This is something that kind of found out new here. I'll go to Coinbase, and there is, I think it's called a banded Bitcoin or bonded Bitcoin. Let me bring it up for you. So it's called wrapped Bitcoin. I don't know if you guys have caught this. It's relatively interesting. So people are, obviously wanting to buy Bitcoin. Bitcoin's, to me, probably the best out there. Bitcoin and Ethereum would be my top 2 for sure. But there's this thing called wrapped Bitcoin. I was thinking, well, what the heck is wrapped Bitcoin? What it is this is the real Bitcoin. Look at the logo. It's the B slanted to, it's slanted to the right. Bitcoin Cash is a B sloping to the left. Now, if you're buying Bitcoin, buy Bitcoin. Don't buy Bitcoin Cash, Bitcoin Trash, whatever that stupid coin is. Don't support Roger Ver. Buy Bitcoin. This one here, I clicked on it just to see what it was. And basically what wrapped Bitcoin is, it is an ERC20 token, which means this thing runs on the Ethereum blockchain. All it is designed to represent Bitcoin on the Ethereum blockchain, which I was like, wait a minute. Why don't you just buy Bitcoin? So here's somebody going out there and trying to create almost a pirate Bitcoin. And what's interesting is an ERC20 token, I can create them almost instantly. I could create an ERC20 token in under 10 minutes. It's easy. It's easy to create an ICO in under 10 minutes. I could create one. So somebody did that here with something that's supposedly tracking the price of Bitcoin, and it's trading for $18,649 per share. Would not surprise me to see this thing disappear. Although I will say, Coinbase probably vetted them and make sure that there's some legitimacy to this. But yeah, don't buy wrapped Bitcoin. Just buy the actual real deal. So it's like buying a cheap knockoff that isn't the actual thing. So bizarre. One other thing that's interesting about the whole crypto space is if you go back, and Brendan probably has the exact numbers, but there's these really interesting waves that happen with Bitcoin. It happened back in, I think, 2009, 2012, 2006, or 2008, 2012, 2016, where it just does this unbelievable parabolic move and just soars. And it feels like that's what's happening right now, is we're starting to get that next wave underneath us on the Bitcoin price chart. As you guys probably have seen, I can bring up the price chart here. Let me bring up TradeStation. I'll bring up the Bitcoin futures. And we'll just go at BTC. You know, the move that's been happening recently is very, very similar to what we saw happen back in late 2016. It's just a very accelerated move. Now, unfortunately, we don't get to see it on this price chart because the Bitcoin futures were not around for that major run-up back in 2016. But I can go to Coinbase, which had it there. Here's your Bitcoin price chart. And I'll show you the all. Unfortunately, it won't go full screen. But you guys can see it had back here in 2000 and it doesn't even show all of it. This is 2013. This was a huge move. It went from 130 bucks up to 875. That's a massive multiplier. And then all of a sudden it did a similar move, but it went from a low. What's this low point here? I can't even get. There we go. That's a data glitch. It went from $1,000 to almost 20,000. And now it seems like we're picking up steam for the next version, which could take it from 5. And if the math numbers are correct, where you get this, factor of 8 to 10, well, we could be looking at much higher. We could be looking at like 80,000 on this thing, which that would be in line with my target for 2023. So there we go. What's up, Frankie Shops? Yes, Frankie, how's Buffalo doing? Cold and wet and snowy out there? All right. Let me see. Are any last minute questions that come in here? Let me go through your economic calendar. If you guys have some last minute ones, type them on in. I'm going to go to your economic calendar real quick. There's not really anything from the earnings front. It's just kind of boring. So here is your economic calendar for Monday. I will probably be doing a show on Monday, guys. I have a friend in town visiting, so I'm not sure what my schedule is going to look like, but I'm most likely going to have a session on Monday. Now, Monday is really, if you look around the world, it's manufacturing and service numbers. You see a lot of it coming out for the euro. You have it for the British pound. You have it for the US dollar. So this will be interesting to see where the different countries stand with regards to expansion or contraction in those specific markets. What's interesting about Germany is they have been, the powerhouse, the fulcrum of the European Union. And their manufacturing numbers have been dropping and dropping and dropping. And you can see it is really starting to drop here. It went from 58.2. The expectation is dropping to 56. Remember, anything below 50, which incorporates all these numbers you see on your screen here, almost every single one of them is showing very close to 50 or below. All of them are showing contraction, which is not a good thing for the global community with regards to growth. So this is a pretty bad sign. We see almost every single country is dropping on their manufacturing and services PMI numbers. As far as the GDP numbers go, you see that happening at 11 p.m. That's going to be after we do the show on Monday. 8.2% is what they're expecting to come out with for Germany. So that's actually looking pretty darn good for the Germans. Very nice there. Okay. Kevin, I think you emailed me about the Bitcoin stuff, right? I sent that out to people. It's an old book that I found. I think it's called The Idiot's Guide to Bitcoin. You can find it on YouTube, or not YouTube. Just go to Google and you can type in The Idiot's Guide to Bitcoin.pdf and you can find that book out there. But it's really good at explaining what money is and then understanding why Bitcoin is so critical to what we do. I think it's very important to what our current situation in the economy and also going forward for a global community. It was just a really good representation of it. So you might want to read that one. If you didn't get it, you can just email me. Just go to TraderMerlin.com and you can click email there, or just email me at TraderMerlin@gmail.com somewhere. Nachos for dinner? Larry, nachos? It's not Taco Tuesday. All right, everybody, that's going to do it for me. As I can see, it's we almost made it to another hour show. Bitcoin for Dummies, that's a different one. It's called An Idiot's Guide. Bitcoin for Dummies, I read part of that. I just didn't like the way it was set up. The Idiot's Guide to Bitcoin is very good. This guy, I think his name is Gustav von Eck. If you want, just email me and I'll send it to you. It's an old. I wish you would update the version because it's version 1. But the first 2 chapters are all about the history of money and why it sets the stage for why Bitcoin is so critical. And to me, I love it. I thought it was really, really one of the better pieces I read on it. So there you go. All right, everybody, that's going to do it for me. I hope that you guys have a fantastic weekend. Be safe out there. Quarantine yourselves. Try not to have parties with more than 10 people. Be careful out there because we're all going to die from this. Anyway, hope you guys have a fantastic weekend. If you like today's show, give me a thumbs up. We usually run about a 10% thumbs up rating. We usually give like 30 likes and like, 400 or 500 views. I think we can do better than that. Anyway, hope you guys have a fantastic weekend. Click the thumbs up there. Share it with your friends. Until then, happy trading, everybody. I will see you guys on Monday. Take care.